Check, check. Welcome in, everybody. Happy Tuesday evening. Hope you guys are making it through the week in life and in trading. Excited about tonight's lecture. I think it's some simple concepts we're going over, but they will greatly help your trading. So glad the people that are joining are here because hopefully it helps you guys. As usual, give it a couple minutes for people to see the premium tag and give them a chance to come in here before I dive in. But yeah. Dalai Lama, good to have you. Rena, good to have you as usual. You guys all make it through all this madness today. Hopefully you knew when to be a bear and when to be a bull. Wasn't very many times to be a bull today, but there was money to be made on both sides for sure. Hopefully I don't ramble too much. I would definitely like to talk about this range at the end of the day, but before that, we need to focus on the topic of the hour. It happens, Ethan. We sell into support and you say, oh, it holds or whatever, and you hold or don't cut when you should. And yeah, what's going to happen is, you know, the opposite, when we push up somewhere. Now, I'm not saying you, but for people. So say we get more sell tomorrow, sell. And then when we start bouncing, people are going to try and short every bounce, which, yes, if we're under EMAs, VWAP, all that, but it's like you might get caught in the opposite. Now there's going to be one of those times where we just bounce off the bottom and you end the day, including myself. I've had those days where you zoom out at the end of the day, obviously in hindsight, and you're like, why did I fight this trend? And so, yeah. Don Peterson, huge news tomorrow. Glad you asked. I'll talk about again the end of class. Tomorrow's FOMC. It's the federal rate decision meeting. So, someone correct me, but 1 p.m. Eastern is the notes release, and then 1:30 Eastern is Jerome Powell's statement. So if you're new or anybody listening that's new or not good at trading or want to reduce risk, if there is one day of the month where you do not trade, that is tomorrow. Because sometimes we get a very, very nice trend day, and then FOMC hits and we get all these chops and wicks, or sometimes we chop the whole day up until FOMC, but it's basically a day. Okay, 2 and 2:30, yeah. So 11 o'clock for me, yeah, minus 3 hours, yeah. Thanks, Rena. 2 and 2:30 Eastern time. So, but yeah, you guys, tomorrow is a very, very risky day. I'm not gonna spend too much time with people tomorrow and reminding them, but yeah, there's going to be big stuff like this where you're like, oh, it's a downtrend and there's a big wick and it totally stops you out and then makes a huge move in the opposite or in the direction that you wanted. So tomorrow there's going to be a lot of portfolios blown up. There's going to be people in gains tab, but there's going to be 10 times as many that blow up their port. So that's my one quick little spiel for you guys, that just, don't act like tomorrow's the last trading day of the year, forever, or whatever it is. Like, the market's going to be open on Thursday. So sit it out, watch the fireworks, cheer people on. But yeah, it's going to be wild tomorrow. Plus, I mean, what do we have tomorrow? We have, do we have Apple and Amazon tomorrow? And we got, there's just so much tomorrow. So, I mean, we got Facebook tomorrow. We got Meta, whatever you want to call it, eBay, Etsy, and then Thursday after hours, Amazon, Apple, like tons of stuff, you guys. And so this is the week to take it easy if there is one. But yeah, let's get started, guys. Lectures always run long, so we need to dive in. Option order types. We're options traders primarily, or most of us. That's why we're here. But every order I talk about today, you guys, will and can be for shares as well. So these are different order types and how to use them, how to use them on the chart. The saying, oh, it stopped me out and it made the big move. There's a lot of people that, like I always say, I can respect it if you just throw a 30% stop on because maybe you're new, maybe you don't know what you're doing. Or like I always say, maybe get called into a meeting at work. A random stop loss is better than no stop loss, because the worst thing you can do is come back from whatever it is that pulled you away from the charts and you're down 80, 85, 90%. And so these order types, like I said, they're for options or shares. But yeah, let's dive in it, you guys. So option order types, market order. is probably one or two of the most common. These top two, market limit order, the most common, I would say. Read carefully as I read it to you guys. When you hit market buy or market sell, you're guaranteed you're going to get filled, but there is no guarantee at the price you desire. So if you want Tesla, I took some Tesla puts today. If you want Tesla puts and you want your entry at 190, hit market, well, you might get filled at 185, which would be better if you're in puts. Your order is going to get filled at the best available price. And so we're going to go over a bid-ask spread in a minute when I go through some charts for you guys. But the market order is the quickest, but again, stuff on very, very wide spreads, you don't know what you're going to get filled at, and that can be very scary. If it's something like SPY, it's a $1. That the ask is, $100, 1.00, and the bid is $99, 0.99. So it's a $1 spread, no big deal, right? You might get a little bit of slippage if you want to get in at 100, you might not. But again, your price is not guaranteed. Your limit order is only going to fill at your specified price. Okay, so same thing. You want to get into SPY 540 calls. We're pushing up. We pushed over 540 today. You're like, okay, I'm going to take a dip and a bounce there. I want to get into 540 calls. And the limit is your specified price. So I'm making up a number here. I want to get it filled for $148, so $148. So that price, if it does not dip to 148, you're not going to get filled. Okay, so again, market order is going to fill you right away. No guarantee, obviously, limit order. This messes with a lot of people. I'm going to go over some examples on earnings gaps and plays, and also, the spreads, how you can work the spreads a little bit on limit orders. It is very important to also do that day in and day out. Next one, a stop order. So a stop order is basically a market order, but you're waiting for it to get there, whether it's a stop loss or a take profit. So if on your brokerage, if it just says stop order, so that is a market order that once the stop is triggered, it'll fill the best available price and turn into a market order. So I enter at $120. My stop loss is $100, 20% down, whatever, if that's the correct percent. So your stop is triggered at 100, and whether it's Robinhood, Webull, Thinkorswim, whatever it is, it says, hey, his stop triggered. Let's get it filled at the best available. If your broker just quick and fast, hopefully it fills at 100, might be 99, might be 98, but it's going to fill at the best available. If it's something slower moving and it's a tight spread, you're probably going to get filled at what you want. If it's something very, very fast, like at the end of the day today, like you guys, if you caught the SPX, excuse me, maybe it went 80 to 300. You're like, oh, market sell 300. Well, by the time you think about that, you look at it, you look down at your mouse, you click market, you might have got filled at 295 or maybe 305, maybe a little bit better. So when stuff moves fast, it's literally when the order is sent off, it's got to go across the airwaves and then it's filled. So one step more protection is a stop limit order, you guys. A stop limit, there's two layers to this. So think of it as your stop is your trigger, and then the second part, your limit. So the order that you want it to sell at. So again, I buy in at 120. I have a stop limit. It's two parts. You'll see two numbers on a stop limit. I can't do it after hours because markets are closed. But again, I want my stop to trigger at 100, 1.00, and I want my limit at 0.97. So once it hits 1.00, this order is going to trigger, and it's going to say, okay, he wants to sell at 0.97 or better. So if I'm in puts, if I'm in calls and SPY is coming down, which means an option contract is coming down, my trigger is at 100 and my limit is at 97 or better, theoretically. So when this order goes through, it's going to fill me at 97 or better. Maybe it fills me at 97, 98, 99, or maybe at 100. Maybe it's that quick. But if something gaps down or moves very fast and this does not get filled, if your limit is 97, you're not going to get filled at 85 or 80 or 60. It's literally going to skip over you, which is rare, but it happens. But when we talk about ER gaps, you guys, um, that is a very, very real thing. Um,
May I interrupt for a second with a question, please?
Go ahead. What's up?
All right. So, are you familiar with Robinhood stop limit?
I am. I mean, I'm familiar with the term. I'm not on Robinhood anymore, but
Okay.
what's your question?
Okay. Well, it's been giving me a hard time. So when I set it up, what I noticed right now, the way you explained it, you said the limit has to be less than the stop. So even when I put it there, so yesterday I lost almost $400 because of that, because I
Hmm.
was counting on it to stop at 5% and it didn't stop. So is there any way that you know about Robinhood in specific or one of the members that is attending the lecture? Because
Um,
it is not working the way you explained. I love for it to work the way you explained. It'll save me a lot of money because right now my stop is manual, basically.
so walk me if you're. I mean, you don't have to talk about exact money, and I mean, I know you see you lost 400, but so what was? Do you remember like you bought in at XYZ stock and you paid like how much did you pay?
I don't remember. It was $65. I think SPY or something
Okay.
like about 10 cons or something like that. And then I wanted to lose $5 on each contract to
Hmm.
stop. So basically I put my limit at $60.
Hmm. And it was for sure
And
a stop limit and not a stop. Like, did it say stop limit?
correct.
There's two.
Because
There's
that's
two.
that's the only option. That's the only option we have with Robinhood, actually. There is no stop order, only stop limit.
Interesting.
Yeah.
I would say, I mean, two things. I don't know if Robinhood has an option of like, I'm assuming you're not on delayed data because you don't want to be on like 15-minute delayed data. But I mean, it might be a stupid question, but so because I know Robinhood for me when I was on it, I was on my phone and I would enter something and say, okay, I got filled at 65, and I'm like, okay, let me figure out my stop. And so by the time I'm doing that, if I'm in zero DTEs, 65 to 60 is not much. That could be within a single 5-minute candle, a 1-minute candle, Mooney. And so I'm wondering, or I'm thinking that while okay, you hit buy and then it pops up at the top of your phone, says, okay, you're in 10 contracts, 65. And you're like, okay, let me put in a stop. And so you type in a stop. And by that time they get submitted, it says order submitted. I wonder if your price was already below, which would not trigger it. You know what I mean? So
Probably,
say while
probably.
you're messing on your phone, I'm talking even maybe 15 seconds later, if we dip down on SPY, depending on how volatile we are, if we're at 0.58 and you're like, hey, limit order for 60, that's just going to sit there, brother. So that's my thought of what could happen. Because you guys playing these zero TTs on SPY and SPX, that moves so fast. Like I said, if you're fumbling around, not so you're fumbling, but that can move, like you're now on the order sell screen and you have no idea immediately maybe what the exact price is. And so maybe it was already over that when you put that in. But a stop limit should fill as long as there's not super, super volatile price action. So we can work on that tomorrow if you want to take a look at another entry. But um, also I've heard, Robinhood and Webull has shit entries or fills. People always say that. And so that is a very real thing as well.
Oh, man, Robinhood is the worst. It is so slow. Sometimes I submit the order and it
Mhm.
takes a second or two. And those 2 to 3 seconds, I like the contracts move about $5, $6 and there's no filling. And you're talking about 5 to 10 contracts. So you already have what, $50, $60 difference in those 3 seconds or 2 seconds.
Yep. And one thing I do, man, I do not trade. If I'm on my phone, I do not trade on Wi-Fi ever because if you're ever scrolling on Instagram, Facebook, whatever it is, and sometimes like a video like kind of has to buffer. That's kind of your internet kind of going in and out and kind of refreshing, so to speak. And so that is a very real thing where my early days on Robinhood or even Webull when I was on my phone, I'd place an order and you do one of those things where you push your finger on your screen and you kind of drag it down, it pops up to refresh, and then the price would be different. So if you guys are on your phones, I highly recommend, I mean, because data is pretty much free now. I do not trade on Wi-Fi because I will get kind of sort of delayed updates on my phone charts sometimes. I have to like kind of sort of have it hit refresh and then it'll be gone. So, but yeah, brother, let's talk about that tomorrow if you want. I want to get to
Sure.
it. I don't want to cut
Sure.
you
Yeah,
off.
man.
Let's
Thank
definitely
you.
take a
Thank
look
you.
at it for sure, man. The next thing, guys, does stop limit make sense to everybody? Menu. I stopped using Hood, moved funds to TOS, just waiting for stuff to arrive. Nice, man. Glad you made the switch. Yep, market order gives you worse fills, limit order a bit late. Yep, Robinhood. Yep. Again, you guys, market order. When I go over the spreads, I'm going to show you here. It's going to give you the best available, and the market does not care about what you want it to get filled at. It's going to fill at the best available price. Okay, my next two favorites, you guys. OCO, known as a bracket order. One cancels other. This is like one of my favorite trades to do. If you kind of pay attention to my trading style and small port tabs or whatever I do or anything I mention, I use this nearly every day. So when I say, hey, I think today I mentioned Walmart puts, I think was a mention. I'm not sure. But when I say I'm entering 69, the 69 strike put, or maybe it's 61, I can't remember Walmart price. I say my stop loss is around this zone and take profit is here. And so that is literally me on my chart. I'm setting an OCO order. So this, guys, this is a no emotion trade. This is a no, how do I want to say it? There's no emotions. There's no moving your stop because you're in too heavy. This triggers, and then my trade is done. So literally the one cancels other. So I get stopped out, or I come down to price target one, and then I move this stop loss. Again, I'm gonna show you a chart. I just want to get through this verbiage here. But one cancels the other. So Walmart hit a price target today, price target one. So it canceled my stop loss that was open on that order at my stop out point. So an OC order is very, very nice, you guys. If you enter a trade with, again, the example I use every week, boss calls you into a meeting, you're like, oh shit, okay, 20% stop, and then push up to 540 on SPY. That's about 50% profit. You can do an OC order just like this. Okay, OCO, one cancels other. Next one, trailing stop order, another favorite of mine, you guys. Let winners win, trailing stop, I have a runner, I want to have a runner. This is how it's done. This is how it can be done. No thinking about it. Again, you get called into the office, whatever it is, you're up 65%. You took 8 of your 10. You want to let these other two run on SPY puts today. You can set a trailing stop dollar wise. So you're up $100 a contract. You can say, I want a $20 trailing stop or percent. You're up 100% on the contract. So your remaining two contracts on SPY 540 puts, I want a 20% trailing stop. Okay. This will trail each time. And I'm going to show you in a second. These are my two favorites, you guys. These are very nice for kind of set it, forget it type of things. Okay. Talking about all these orders, the back half, you guys that are swing traders, when you set a stop, so you guys probably maybe you swung some SPY calls today. We bounced that 538 zone. I think we tagged it once this week, but that's the first time we've been down at SPY since June. Okay, you're swinging SPY calls. You got them 10 minutes before close, and you said, I want a 20% stop. Well, that stop loss by default, you guys, is day only, meaning once today is over, that stop loss gets wiped. So that's no longer a stop. So if you're swinging SPY calls and you said, hey, I want a 15% stop, and it is not good till canceled GTC, if it is set today, which is by default, when market opens, pre-market tomorrow, that order is turned off. So if we gap down and you're down 50%, that order is not going to get filled at your 20% stop, you guys. So when you place a stop loss order on swings, especially, you want a GTC, good till canceled, meaning the order stays on until you cancel the order. Okay. Same thing with profits. I swung some SPY calls. I got a meeting tomorrow morning. I can't be in it. I want to take profits at 20%. Well, you put that order in today before close, that order gets wiped tonight. Does that make sense to everybody? GTC or day. When you have your option order open, there's a little box or a little down arrow. Always pay attention to that. If you're day trading and you intend to buy and sell that day, just do daytime. But your long swing stuff like that, I was in Lena. I don't know if she's in here, but she called Walgreens. Really nice swing trade. I sold 3 of my 4 on I think the first day or the next day, and so that last runner, I put a GTC order above entry, so good till canceled. So assuming it didn't gap down below my stop price, I'm good to go on that. Does that make sense, everybody? We get to some charting, so this is not so boring for you guys. But the next few slides, yes, Nick, you can do let me go. So here, I'm not super good with Thinkorswim. If you're looking, Nick, your template here, here's your OCO. When you click on it, by default, it's gone offset at 10, so $10. So this is based on Apple. If I buy Apple at, what's Apple at? 218. So if I buy Apple at 218 right now, wherever that is, right here, and I immediately do an OCO order, it's going to do $10 over 218 plus 10, or $10 under 218 minus 10. But you can set this however you want. So you can set this for $50 OCO order on this. Okay. Same thing. If this was markets are closed, I don't know if I can click anything, but you guys get the point. Disney 80 turns in the same thing. So market's open right now. I want to buy Disney 94 calls for $87. You can send OCO order right away and you set that offset. So that's how it's done right there. Again, I'm not super good with it, but that's where it's at. And there's your singles. All right, back to business. Some visual stuff, you guys. I'm a visual learner. Gap downs. Again, this is kind of what I talked about on stop orders, market, or even a daytime, stop order on the day. So this can be for shares, or this can be for options. So again, you buy in whatever it is. Apple shares, you buy $100 worth, or I mean, you buy, say Apple's at 100, or say you buy a contract that's $100, and you say, I'm turning a stop on 95. Okay, again, stop market order. Okay, I want to stop at 95. But you take, did anything gap down really bad? CrowdStrike, Ford is another one. If this is a good till cancel GTC order, you're gonna wake up the next day. Oh, I set it at 95, but market opens at 92. You're getting filled at 92. Okay. Or same thing during the day, market knifes down. You set an order at 95. You might get filled at 94. You might get filled at 92. All right. Stop limit. Same thing, just the extra layer of protection, guys. Okay. So you buy a SPY contract at $100. Okay. Let's not pretend we gap down, but let's just pretend you're in calls. And so this is SPY is going down. And so is your contract price. You buy in at $100, your stop, which is the trigger at 95, trickles down, trickles down, trickles down. This triggers, and now your brokerage says, okay, he has an order for 94 or better. Boom. Let's just say the market's moving slow. Okay, you're going to get filled at $95 on you're taking a $5 loss on that contract. Does that make sense, everybody? So yeah, SPY keeps going down or whatever it is, keeps going down, but you're okay because as long as this isn't a gap down in ER, if this is during the market, when that triggers, you're saying I want this price or better. So if we're in calls and it's going against us, 94 or better. That's what you want to do. Does this make sense, everybody? ER gap downs. All right. Doesn't matter. I was in puts. I didn't follow all the way through because I'm a wimp, so that doesn't matter. But let's pretend this is the forward earnings from, was this Monday possibly or Friday? Okay. Same example as this, but real life example here. Okay. let's say you're bullish on Ford. So at the time, let's just pretend this was today. Okay, today it closed. Ford is trading at 13.66. Okay, and so you know what? I think Ford is going to do good on earnings. I'm taking a 14 call. So this is, you can see up here, Ford, the 14 call expires Friday. So this line right here is closed today. Just ignore this. Again, pretend this is right here at close. So at close, you bought at 13.66 the price. You bought a $14 call. You bought 42 bucks. So this line lines up here, guys. This line, this is the options chart for the 14 call. You guys know how to do this. And this is the stock price. Okay. And you say, you know what? I don't want to risk a lot on earnings. So before close, you put a stop loss or a stop limit, because in this case, it does not matter. Well, actually, it does matter. Okay, let's pretend you just do a stop loss. I'm doing a stop loss at 35. So you know what? I'm going to take 10 contracts. I'm in at 42 bucks. I'm risking $7 a contract. Okay. And what does Ford do? It gaps down overnight, and tomorrow we open here. So remember, a stop loss at 35. Your contract's open at 0. Your contract's open at $1. Because two scenarios here, guys. A regular stop order. A regular stop order fills at the best available. Okay. So your best available when the market opens, because you have a stop on, you're gapping down, it's going to fill you down here. A stop limit is another thing. Okay. Stop limit. Okay. You did your stop limit at 3.5. Well, guess what? When the market opens the next day, we gapped under your limit price. So you said, I want filled at 35 or better on my stop. We gapped down and your contract is worth $1. So now you have to cancel this order because it did not fill, as long as it was a GTC, a good till canceled order. So you guys see how earnings are very, very dangerous. Like, it doesn't matter if you have a stop loss on, you gap down like this, you guys, and you're opening to a 99% loss, 100% loss. Okay, does that make sense to everybody? So ER gap downs, you guys have to be very, very careful, very careful. So again, your stop limit's 35. Market doesn't care. Market open, it says, hey, you're below 35. I can't fill you because you're not at 35 or better. So you open at $1 and you sell for a big loss. So guys, got to be careful earnings. Hopefully that makes sense. OCO order. Same thing like we talked about. This is exactly what I do if you guys can visualize. So this is a scenario where the price is going up. So let's pretend I'm in calls on something today. Let's say, I bought calls at, say the price level is 540, and the price was for the 541 calls. This is just a visualization. The price for 541 calls was $1 or $100. Okay. So if I were to put this trade, it's not a small port trade, but if I were to put it in that tab, and I were to say, my stop is below, this is just the number 439.5. Okay. I'm not picking that number 439.5 on 540 SPY as a random number. I'm picking that number because I know it'd be a break below support, and that number I give is relevant to this here. So I know my stop would be a 30% stop on that trade, hypothetically. And I know my first profit zone. So if we sell, we have a huge, as an example, actually, this might be a kind of won't be a direct comparison, you guys, but it'll be why you could have a wide take profit. So I actually took this trade today. Where did I buy? The number won't be exact, but somewhere around here, River and I had a level. I don't know what it was. I bought somewhere around here, and then I said 540 question mark on SPY on trade floor. So that was me looking at a huge 5-minute candle here outside the Bollinger Bands, in between the next support. overextended. Yeah, it could have went down, but that was me kind of hinting, hey, I'm in calls. I want to bounce. I bought somewhere in here. I don't remember. I have to check my Webull chart. Was it right? Maybe it was right at 539. Anyway, the point is not profits. The point was I knew my stop was the percentage was less than my potential gains, because if you look from a psychological standpoint, yeah, we could have chopped down here and laid down, yes, but I knew we get a big move like this, 540 to 539, a dollar move in almost a 5-minute candle. I knew, or I thought, that we would likely retrace. That is a big move. That takes a lot to make that move. So my point is here, when I come back to this scenario, that is why that's a scenario where you can have a 30% stop, and a higher take profit. So again, an OCO order, I buy in and I immediately set this. So if I push up to here to 140 and say I take this profit, this cancels. One cancels other. So buy here, we push up, this cancels. Buy in, we push down, this order cancels for a limit sell at 140. This will cancel. One cancels other, you guys. Those are really nice orders when you don't want to watch the trade. You got a little bit of time. Scalping 0 DTEs is not so good, because by the time you kind of look at something, figure out your take profit, your stop out, this trade has probably moved against you. I don't like OCO orders for 0 DTEs, but anything with a little bit of time, these are great. Again, another example, OCO order, entries here. This is another thing I like to do. So you'll see me on small port tabs. I'll say, I enter at XYZ. Let's just say I wasn't in Disney today, but Disney was a nice trending one. So let's just say Disney. I entered Disney, 94 calls. I entered at 85. I said my stop was around 0.70. Again, hypothetical. And, profit target 1 is around here. It's going to be $1.05. Okay. So we push to profit target 1. Immediately, I set and I think about an OCO order. So when I push into profit target 1, we keep pushing. This can be the value price of my 94 call. I guess if I looked at my notes, I could be smart here and said this is a GM call. Sorry, you guys, a little bit tired. GM, I'm in a GM 50 call at $85. Sorry, you guys. I sell 7 of my 10 up here, you guys. 7 of my 10. What do? Bare minimum stops at entry. But if you guys see how I like to trade, I list 2 or 3 profit targets. So once we're above profit target 1, OCO order is on. No questions about it. That's how you get a low stress trade, how you let runners run. Okay. Doesn't always work that way. Maybe I listed 3 profit targets. Okay. So I sold 7 of 10 at 105. What do? My stop is now at price target 1. Again, this for me, I like to trade levels. I don't like to trade percents. But again, if you trade percents, you guys, that's okay. As long as you guys have stop loss and profit targets, I'm not going to be mad. But I would prefer you take profit at zones, not money. Not, oh, I'm up 60%. No, you take profit when it makes sense. Okay. Nick, this really exposes how much risk you're actually taking on by blindly taking. Yeah, exactly. I mean, 538. Yeah, we're running long, of course. I'm going to show you guys in the end though. So if we have to run long, we will. But definitely, Nick, I literally look at the options chart on every single trade, and I say, okay, if I enter here, how much am I risking? If I'm in puts on something here, and I push up, how much am I risking? I find that on the options chart every single time in. That's how I do it. It takes a little bit, but you guys, it takes a trade plan, because when you're in this, there's no stress. So again, I sold 7 of my 10. We push up. I say, hey, profit target 2 is around 135. Well, guess what? We pushed up and we trickled down. Yeah, I left potentially $30 on the table, but I trade zones. I trade profit zones. That's all I do. So this OCO order, again, this profit here on the remaining 3, again, did not hit. It came down and my OCO order triggered at 105. Okay. A lot of talking. I know I'm kind of breezing through this. Hopefully that makes sense to everybody. But this is the bread and butter on how I trail runners. If I say, hey, sold 35 of 40 or whatever it is, my remaining 5, that's what this is right here, you guys. Trailing stops. This is another one of my favorites, you guys. Let's say SPY was trending all day today. You bottom ticked, or let's pretend here. SPY opens at 538. It's a big zone here. Let's say we consolidate on SPY tomorrow morning and we rock it up. Okay, you bottom ticked. You got lucky. Today's your day. Okay, profit target 1. 1K says sell at. We're down at 538. 1K says sell at 540.24. He's got good levels. Whatever, I trust his levels. That would be bigger than 20%, but let's just, for simplicity, let's 540.24. Okay, I'm selling 8 of my 10. No, 5 of my 10. Okay, and now trailing stop. Remember, set it, forget it, let it ride, you guys. Okay, we push up, I sell, I don't freak out. We push up over price target 1. Now I set a 20% stop. Okay, so from here to here, I set a 20% stop. That does not trigger. We push up. I'm sorry. We push up, and now I turn on a 20% stop from this point. Okay, so 20%, we dip down, does not trigger. Okay, push up, profit target 2, you sell some more. Okay, and this 20%, you guys, is always adjusting. So you're up, your contract is worth, $100 now. So 20%, we do the math, that's 80. So it dips down to 85. Okay, that's not 80, doesn't trigger. We push up, we push up, we push up. So now you're at 50%. Okay, so now your stop loss is 20% from your highest. It's always your highest point. So we push up, 20% stop is from this point. Your 20% stop is here. It did not trigger. You're still in the trade. You're rolling. We're trading all day. You're not 50% gains. Your trailing stop is still on. So 20% from 50 here. Okay, so it triggers. We push up, pushes up to 60. Maybe you take profit, maybe you don't. Maybe we don't quite push up and we come down. So again, 20% from your high, it's always from your high point of your profit. Okay, so we push up, maybe it's 59%. Oh, you don't take it. We come down, boom, 20%. Trailing stops, you guys, set and forget it. These are super nice. Again, to just let a trade run. Like, don't sit there and watch every candle. I mean, if you want to, if you're a scalper, that's fine. But if I'm going to trade with a week or two time and it's like, man, I got to step away, boom. I'm either doing an OCO order or a trailing stop every single time, you guys. Every single time. Obviously, would be in hindsight on a trade, whatever it is, but this could be profits on puts. So if you bought puts at 546 because you're not long at 546, you know what 546 is, you top ticked, and you ride the value of your puts all the way. This is how you do it. Trailing stops, you guys, again, this can be a percent or a dollar amount. This can be $20. So you're up $40, $20 doesn't trigger. You're up $60, $20 triggers. Does that make sense? Okay. My favorite part about learning, you guys, how I feel like trailing stop, good till canceled. Interesting. iPhone, I don't want to give you bad information. I would assume you can do trailing. I don't know if it's day only or good till canceled. If anybody knows it's smarter than me, let the chat know. iPhone has a good question. I do not know. I don't want to give you bad information. Guys, SPY, this was yesterday, I think, was it? Yep, okay. I stopped out too early. How many times do people say that? Okay, so let's focus on, you guys know I love doing this. I've done lectures on this. Let's focus on this candle right here, you guys. Pay attention if you want to know how to not stop out too early. 546, to me, top side is the only level that matters. The only level that matters. I actually took this trade. We opened, this was yesterday's price action, you guys. We push up, we break out, but yes, this is a 5-minute candle. So we broke out, but did we hold? No. Immediate smackdown. We sell down. You don't chase the bottom of a kill candle, what I call that. What I always say to you guys, a break and retest, break down and retest. We break down, We retest 546, okay? Where is my entry? So this line, so let's use our brain power here. So when SPY goes down, this is the value of a 546 put. So another thing, guys, when we're trading right at 546, I buy at the money puts because I know if it goes against me, I'm still barely out of the money on SPY puts. You can buy 545, but 545, is way down here. They can still pay, but I buy at the money puts, okay? And so see how this candle pushed up and wicked? So that is this candle right here. So again, this is the option value chart of the 546 put. So this wick here, this line is right here, you guys. So look at this trade. $1.43 you buy in, 30% stop. Let's just say 30% stop, random number, 30%, right? Does anybody know what 30% is? 30% is below this value. This is roughly 28%-ish. I think if I did the math right, 28% or 20% was right here. So 30% stop, still went and tag. These are the trades you guys need to be in where if we push up to here, it is obviously stop out on puts. Say you have a wide stop 30%. If we break out here, we push to new highs a day on the day, no reason to be in puts. These are the trades where I talk about, you guys. It needs to be obvious where you stop out. Okay? Where you stop out and why. Why does it make sense to stop out there? So again, this wick is 546. Buy in at 143. That wick, less than $20 a contract. Less than $20 a contract. I'm risking here. Okay. This red zone of risk is this red zone of risk here if you want to keep a tight stop. So we push up, we wick down. Immediately, I look at this wick here and I go, okay, what is the value of that contract right here? So if we sell down and we buy back up again, and maybe we push up, we trickle again here. I know right here, this value of this contract is $1.26. So minimum, I can move my stop now to $1.24, $1.25, whatever it is, because I don't want to get stopped out. The worst thing to do is stop out, your trade plan works, and then you freak out on a bounce and you stop out at a really stupid level, stupid psychologically, because 546 is big. Okay. And so these are the trades here. Okay. And now moving on, what we learned tonight, you guys. So we sell down again. What do I do? Where's my profit target instantly? If you know how I trade, I don't trade percents. We get this nice kill candle here. What am I immediately doing? I'm looking left and I'm finding this zone here. Why am I finding this zone? It's early in the day. We already had a buy up candle here. And now we sell through here. If we sell through the low of the day, you better be taking profits every single time, you guys. Every single time. Okay. So how do I find what this value is? You can figure out where I'm going here. So this box here, it's a bad box here, but these low candle here on SPY, let's look at the options chart. Look at those wicks. So that is now my zone of interest here. So this zone here on a sell down is this here. Okay. Another thing, theta decay. Decay. Even though this is only a few minutes, you guys, this is 10 minutes. So the bottom of this candle here, buy in 1-2 candle. Let's look at that is this candle here. Let's look at something. This candle on the SPY chart is lower than this. Yes, obviously. Is my value more than that morning open? No. Right there, that is theta decay in action. So let's just call it 232. And the morning it peaked out at 252. Almost a $20 difference, you guys, from where SPY opened here. The value, I guess I shouldn't have said in a 10-minute candle, but so the value when the premiums opened on SPY, this first 5-minute candle down, the low of the day was 252, we'll just call it, for that SPY put contract. And now, I think this is like an hour and 10 minutes later, you can see decay already kicking in. Hour and 10 minutes later, you're like, oh, I sold down to low of the day at the time. Why is my contract not worth 250? Well, that's theta decay, you guys. So another thing, buy time, you guys. If you were to buy, this was on, let's say Tuesday. If so, on Monday, if you took this trade, if you would have bought a Friday contract, I can bet that that contract was the same value because you don't have much theta decay. Or you buy a leap contract, just as a wild example, I guarantee that price there on your leap contract, hour and 10 minutes later is the same price. And so you use the option chart to figure out where to stop and take profits, you guys. Let's see. Nick, stupid question. So you already have your play picked as your limit order set. Let me read it. So you already have your play picked as your limit order set. Yeah, definitely. So you hear a lot of people say, especially River, if you're a scalper, you do this. So you watch this price action, and you literally, if I'm in Nick, Nick, if I'm interested in the 546 put, I leave this open because this moves in real time alongside. So if you've seen how I trade, I mean anything, shit, I'm still on these stupid annotations. Whether it's Webull, whatever it is, it's not open right now. SPY 540, whatever it is. This is my active trader right here, Nick. Every single time, every chart, whether it's Thinkorswim, whether it's Webull, the options chart is moving side by side. And yes, I'm literally waiting for an entry, and I do this. I look at it, and I say, okay, when SPY was around this zone here, we sold down. What was the value around this 546 here? And you look at the value of it, and you go, okay, 543 to 125 is my buying. So yes, you set a limit order at $1.25, whatever. Maybe you bottom ticket perfectly. You say, hey, I want to figure out where this zone was here on this candle. And that's this candle here. So you're like, okay, $1.40. That's literally what I do. I watch the options chain, and I put a limit order in, and I smack it on there every single time. Any questions on this, you guys? Moving on. Okay, how do you find price target? Same thing. You sell down to a big level. 544 is a big level. Again, I'm not selling on percent. Okay, so now this is a trailing stop example or an OCO example. Okay, we sell through price target 1. Again, I'm gonna get some drawings here. Price target 1 is here. Price target 2 is down here. Okay, we sell through, we bounce, we sell through price target 1. Okay, we trickle down. Okay, where is my stop out when we see this price action? The answer is obvious, you guys, or if you know my trading, we sell through price target 1. I'm looking at these candles here on the options chart, which are these candles here. So I know somewhere between 208 to 232 is this stop here. Okay, 208 to 232 is that stop. You sell through price target 1, immediately your stop, if you want, if it's a number, you should be thinking 208 to 232. We sell down, we sell down, we sell. I sell, 2 more contracts at 544. Okay, and maybe let's pretend we just chop this zone here. Let's pretend we don't get this big candle here because I probably sold everything. Let's say we get this zone here. I sell in the price target 2 here. Immediately, I have 1 left. And so my price target 2 is met. My stop on my runner is price target 1. Let's just say it's 232, whatever. So we sell down, we push up, and boom, I get stopped out somewhere in here. No stress. Yeah, I gave back a lot potentially, but again, if I was in 10, for sure, I'm selling 6 or 8. I'm selling 1 or 2 more, and I'm leaving a runner. Yeah, maybe let's just say this is 8% gains and this is 50%. Yeah, I gave it 30%, but you forget I trimmed all the way down. It's not I'm holding 10, I didn't sell 80%, and now I give back 30. That's stupid. Yeah, I gave back a lot on the runner, but that's a runner, you guys. I profit, and then it stops me out. That's fine. But the worst thing you do is let it go back to 0. Okay. Does that make sense to everybody? I've done an entire 1 hour, probably an hour and a half lecture, as long as I talk, lecture on this, purely on finding profit targets using the options chains chart. Hopefully that makes sense to you guys. Let's talk SPY. Let's talk a range. Let's talk a game plan. You guys like talking charts? SPY. Let's wrap this lecture up. You guys, if you're new to trading, ranges, tight ranges. A $1 range, we don't want, we don't like. 538, 540 to 546, a $6 range. This is a blessing, you guys. When we see, this is a 1 hour chart. When we see a sell down of an old level, we come down, we push, okay? When we sell down huge levels, we cannot forget what 546 is. It was a big old level. We sold down, what happens? Bulls never had a chance. We push up, failed breakout. Yeah, you took some money there. If you took that breakout, fine. But for me, and how I like to trade, I trade these larger extremity zones. And so for me, if you guys are new to charting, 546, 544, 541 and a half, 540.25-ish is okay. 539 and 538. You can have 5 levels here. And this zone, you guys, is a absolute blessing to trade in. Because a trading plan, Nick and other people ask, it's like I have a trading plan without even thinking about it. Like when I talk on trade floor, 546 gave away, 544 gave away. Like I'm hinting you guys like these key levels here. And I even shade them out, shade areas. And so because when I'm on, you guys have seen my charts, when the charts are tight with like 4 screens, I don't have it right now. But when I have like 4 charts open, the charts are tight and I don't want to think about it. But I know when we push up to 546, I know I'm cautiously, people take it breakout. Well, breakout failed. It broke out, but it failed on the day. Breakout 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 failed on the day. You guys, we know what 546 is. 538. Look at that huge bounce after hours. There were some earnings. 538. Like, not only look at the wick, but like how much money, how much buying this takes to bounce 538 to 540. This candle opened here at 540, bounced to 538. You made money on puts, but look at this buyback on the one. This is a 1 hour candle, you guys. 538 to 543. We'll just round it. That is a huge buyback. That takes so much. Think of how much it takes to move SPY, thousands and thousands and thousands of shares. And so when you guys see these key levels here, you guys on ranges, this is a blessing. Again, we push up or open at 544 tomorrow. I'm cautious. What do we have when 544 breaks away? Huge moves, you guys. When 544 bounces, big moves. 544 bounces, big moves. 544 gives way, big moves down. Big moves down, you guys. Chart on the larger time frames, you guys, and don't make it difficult. You say, well, how do I trade in 1 hour? Well, the 1 hour time frame, you build your plan, okay? And for you guys don't know, this purple line is ever changing, but it's following the daily 9 moving average. So if you were to go the daily time frame, it's the 9 moving average. So we say we use the 9 and the 20, okay? Well, 1K, I'm a scalper, I'm a day trader. Okay, let's go the 5 minute. 5 minute. Where did we reject on the 5 minute time frame, you guys? Where do we reject? The daily 9. Hello. Daily 9. Where do we sell through? Oh, I only like 5 minute time frame. Where do we sell through? 546. It's all the same, you guys. But you have to build a trade plan on a larger time frame. And then when you guys say you want to top tick some puts, this is how you do it, you guys. You buy where it's obvious. Okay, you take puts here. We push up, you stop out, no big deal. You know why it's no big deal? Because we reclaimed 546 on the day and we reclaimed the daily 9. These are the obvious trades, you guys, where when you stop out, you can't be pissed. I mean, you can be bummed you stopped out, you lost money, but as long as your position size, like if I took puts at 546 and we stop out here, I'm not mad. I mean, yeah, I'd lost money, but I'm not mad because you know what? I'm flipping because the EMAs are probably trending up. And we're probably going to trend over 546 over the 9 daily on the day. But you guys are like, oh, I can't catch runners. I can't hold runners. This obviously is in hindsight, but this is how you do it. You take your shots at these big areas. Okay. First time at 544 today, bulls won on a bounce. Obviously we sold through. Okay, we sell through here, 544. I am immediately bullish. I'm looking for bounces. Excuse me, bearish. I'm immediately bearish. We sell through a huge level again on the hourly. I'm obviously we got a kill candle. There wasn't much to trade unless you caught that, but I'm looking for bounces into the next big zone. Bounces in the next big zone. We sold down here. I'm looking for bounces into the next big zone. Okay. Same thing tomorrow. Hypothetically, 544. You guys better mark on your chart. We push up. Granted, tomorrow's FOMC. I don't want to get too crazy on levels here, you guys, but these levels are still going to matter tomorrow, before the Fed starts speaking. But you guys get my point. Larger time frame, and this can be anything. You guys trade NVIDIA. Why is that not linking? NVIDIA, breakout, fail, breakout, fail, breakout, fail. NVIDIA bounces, bounce, bounce. Like, works for anything, you guys. Slower mover trades, whatever it is, you guys, it works for everything. So, I guess in summary, just start in the larger time frame, as Nick kind of said. Build a plan. There's no reason to I know you guys do it. It's an experience. It's maybe a little bit of greed, but you guys get inputs. You're like, oh, I'm up huge. Where do I sell? Where do I sell? It's like, you guys, this range right now is too easy right now to play. Too easy. Okay, 546, 544, 541.50, 539, 548. That is my range. Tomorrow, FOMC again. I'm not gonna say it doesn't matter, but when the dust settles tomorrow, that's when I'll build a plan, or we'll see where things settle out tomorrow. But tomorrow, again, FOMC, you guys, is at 2 p.m. Eastern, and then Powell will come on at 2:30. So make note of that. Stop losses, save ports. Let me check the chat. Otherwise, I'm going to end this lecture. Ivy, yes, trailing stops an active trader. Absolutely, you can. I think you can on Thinkorswim for sure, on Webull for sure. And when I say active trader, or what do you mean? Basically, just if you pull up an order, I guess the market skills, I can't pull it up, but when you pull up an order, say you're in big profits, Ivy, and you go to sell, when you open that, your brokerage should say stop loss, stop limit, OCO order. That's a tongue twister, or percent, definitely. Kyle, yeah, glad Loves could help you guys. Anybody have any questions related to this? Anything at all? Otherwise, I'm gonna actually end on time. Looking good. All right. Have a great night, everybody. Hopefully you learned something new. This lecture and all of them are recorded. Let's trade smart tomorrow. Let's build a game plan. Take it light, because tomorrow it is very, very likely we're going to see lots of wicks. Typical to like a Monday range, we're probably going to see stuff like this in the morning. Push up, oh, you think a breakout comes? Nope. Push down, you think a breakdown fails? Nope. We're going to see something probably like this up until the Fed, up until 2 p.m. Eastern, and there's going to be a big move. There's going to be a big move in the notes release, and then there's going to be a bigger move. Does anybody, I don't know when the last FOMC was. We can look, just because now I'm curious really quick. It was probably late June. Anybody know the last FOMC? Or was it? I don't know when it was. Anybody? Let me see. Just because now I'm curious. FOMC dates. If I can't find a couple minutes, we will forget about it. Let's see what they say. June 11th and 12th. Gotta go way back machine. Oh, just to kind of show you guys how to not get wrecked. Is this it? Nope. Is this it? Yep. All right. This is FOMC day here. Just so you guys can see the wacky stuff you're going to be. So we had a nice trend day last FOMC last month. And at 11 o'clock right here, this candle here, big sell down, you cheer, you take a screenshot. Oh, your put gains are gone. And then Powell starts talking. So we get these big moves, you guys. So just be careful, as all my last heat of advice is things are going to be wild tomorrow. We might chop, we might trend, who knows, but save your port. All right, you guys, if that's it, I'm going to stop class here. Hope you guys all have a great evening. Appreciate y'all for sticking around. But let's have a great rest of the week, you guys.